Hi everyone, I am İlyas Gülenç, the co-founder of EcoStrategy Consulting Services. Today we will delve into latest development on the side of European Green Deal regulations, especially related to sustainability reporting. And I am very excited to have Amanda Koefoed Simonsen. I am delighted to introduce her, who serves as a partner and ECG practice lead at Copenhagen Chancery in Denmark. Amanda is a distinguished expert in ECG strategy and sustainable business advisory. She has played a key role in shaping EU regulations such as CSRD, CSDDD, and EU Taxonomy, and advocates for smarter, innovation-driven sustainability implementation rather than compliance-driven reporting. She speaks regularly at high-profile forums, including the 2030 Agenda Stakeholder Forum hosted by Polish Presidency of the EU Council, where she has guided discussions on reducing regulatory burden while driving climate ambitions. With her deep knowledge background in public policy and academic training from institutions like the University of Copenhagen and Yale, she expertly bridges EU policy, strategy, and practical ECG integration across sectors. Amanda, welcome. I'm very excited to have you here.
Thank you, Elias. Thank you so much. And I'm so delighted to be here today to elaborate a bit on the current environment and sustainability. And a lot of things has happened since the Omnibus was launched in late February. And now we do see some forth and back on the new ESRS simplification. And I will give an overview of that. But first and foremost, I think it could be a bit of relevance for all of you to have some more insights in the current landscape of sustainability, both across sectors, but also across different industries. And we are working with a lot of analytics, data, and insights across sustainability. But also linked to sustainable finance and also the direct influence from the financial sector on the private sector, but also how this shift has happened towards being solely focused or partly focused on the private sector into now being much more focused on the public sector and also on the financial sector. So whereas we saw that the huge rollout of the CSRD, but also the CSDDD and the EU Taxonomy, together with the Sustainable Finance Directive, which was for the financial sector, we saw that this massive pressure was created on the private sector because that was the only sector eligible and some of financial institutions eligible for the CSRD report itself. And since it back in the day, it was from 250 employees and upwards. We do now see it's still in public consultation. So let's see, but I imagine that it will be around the 1,000 as expected from the European Commission. That at least within the proposals right now.
Do you think there will be also a financial threshold for CSRD? 450 million euro like that?
Actually, we did not see that many discussions around the revenue and the balance sheet thresholds, which were applied to like the second and third wave under the first Corporate Sustainability Directive. But now we do see this employee threshold as the only one applied. And right now we are still in discussion of the second and third wave. And I think it will be the same thresholds across sectors, whereas the financial sector will also be obliged to report on the Sustainable Finance Directive. So I think it will be the same for the CSRD.
Okay, there will be two major changes in CSRD. One is the raising bar for employee threshold from 2,050 employee to 1,000 employee, and the other major change is the simplification of ESRS standards. What do you think about the impacts of these changes on both European companies, the companies that are in the value chain of European companies?
Yeah, so the latest week we have seen that the EFRAG ESRS simplification and the exposure draft was released, and also that the consultation is open. Also that the VSME standard is recommended by the European Commission, so it's more publicly backed by authorities to actually do the voluntary standard. And then we did see the latest state of play, which is a report on the newly established portal for ESRS. And the state of play gives some kind of picture of the wave one reports. And yeah, to go to your question, we did see that the simplification and the exposure draft actually showed us that the ESRS length, it's reduced by 55%, and the amount of mandatory data points is cut by 57% as well. So actually it's quite a lot. And then the total disclosures, which is both the mandatory part and the voluntary part, it's down by 68%. So what do we have back? We do have some mandatory tangible, so the quantitative disclosures that are mainly kept. And then we've seen that the voluntary disclosures, they are fully removed. And then we have some new relief mechanisms included for excessive cost and effort cases. But otherwise, we do see that it's what some people will call it like watered out. We do not have the same incentives. We do not have the same implementation requirements. It's much more towards the reporting side of sustainability. And I know in order for you to report, you also need to gather a lot of data. So with that said, we will still have some implementation in the companies, but it will be slowed down. Also in terms of the new thresholds, we will definitely see a slowdown in sustainability revolution in European companies. But what we do also see is that the authorities or the commission, they put a lot of effort into promoting the voluntary SME standard. So this reporting standard should actually be adopted into SMEs. They do suggest that it should be below 250 employees. So still we have a gap from 250 to 1,000 with an amount of company, actually a quite large amount of companies that can choose to opt into the CSRD requirement, which will be too much of a reporting burden. That was why we, in the first instance, actually choose to simplify and to reduce the amount of data points. And at the same time, they can choose to do the VSME will be a bit too simple for their size of company. But this is some kind of gray zone for them. Some companies that we work with, they choose to do the VSME and with a double materiality assessment because it's not embedded into the VSME. And then they choose to do a value chain assessment. But in practice, what we do see is that the effort and the buy-in to actually implement more sustainable practices into how you're driving your business forward is actually slowing down. And a lot of things are happening in the greater world, which is also having a huge effect on our all the priorities in the businesses themselves. We do see a massive pressure from the use of AI and technologies, new technologies. And then we at the same time also see a massive geopolitical pressure, a tariff pressure
Ukraine war.
as well, which is also taking up a lot of time in the companies for
Yeah.
actually
It's very
avoiding.
complicated, actually, as you said.
Mhm.
Actually, you are not just a sustainability professional. You are also a sustainability activist, I think. What do you think about these changes? Is it a recalibration or rollback?
Yeah, I mean, it's so first and foremost, it's not simplification, it is deregulation, because you are certainly decreasing the amount of companies that will actually mandate it to do the sustainability reporting. So that's first thing first, that it's not simplification, it is deregulation. With that said, I think it's actually also fair to somehow add a concept of proportionality into how we do see reporting and how we do demand reporting from companies. I think at the same time, the reporting will actually also create this pressure to actually implement, monitor, to navigate after certain principles and certain tangible principles, which is set by financial KPIs, and now they were also set by sustainability KPIs. They are still set by sustainability KPIs in larger entities and also in the banks. I do believe as an activist, but I do believe in sustainable finance. And what we do see in the financial sector and in the banking industry is actually super interesting. We're looking at sustainability-linked loans. We're looking at just regular loans where SMEs actually measured against their sustainability risk, their climate-related risk, physical risk, transition risks. And this is actually all for protecting the bank lending portfolio. So if you are to have a loan in the bank, then you will be asked sustainability-related questions. And that movement will not disappear, because this is not only impact and sustainability, it's actually also how do we preserve capital and how do we lower the risks associated with our lending portfolio or our operational activities. Because the bank also needs to ensure capital, and they need to have the money back in order to lend them somewhere else. So we do see also the investment communities that they are focusing more and more on the external risks. So not only inherent risks or industrial sectoral risks, we do also see more specific risks accordingly, where we are looking at external risks, such as which risks do you have in your upstream supply chain. It can be related to a labor market, it can be related to the lack of supply, and the lack of supply will actually often be related to climate change. So we do still see these, what we call transition mechanisms, where we have some shortages that will actually have a spillover into certain sectors, into logistics, and then it will have a direct spillover into the demand. It will have a direct spillover into maybe demand erosion, and it will have a direct spillover, not at least into how we are driving the cost structures. So what we do see right now with the macro scenario on the tariff landscape, that will definitely push demand and or demand erosion some places in the value chain or in the supply chains. Then it will push cost structures. It will also have industrial impacts, and it will have both long and short-term implication. And if you as a business is not hedging you towards these risks that external events will have of consequence on your business, then you will experience a lack of competitiveness. And this is also what the bank will be looking at when they're looking at, okay, what should the interest rate be on the loan for your business? Or how can we help you with financing? Then they will look at these kind of risks, which will be climate related, which will be supply chain related, labor related, and throughout the reporting process, this will clarify your way of looking at the business holistically. when you're doing the double materiality assessment, you will have much more insights into how you can collect impacts, risk, and opportunities throughout the whole value chain. And this will actually prepare you for these kinds of events. So the report itself may be for the sake of reporting, but actually the report can be used for much more. That's why I'm an advocate for.
It can increase the resilience of businesses or companies.
Yeah, definitely. I mean, and it should be, because if it's only for the sake of reporting, then I think it's waste of time, basically. But if you can go to the bank, say, okay, hey, I do have a better risk profile than my competitors in my field, then they should look at you saying, okay, great, but then we need to lower your interest rate, because this is where the competitiveness will play in. You can also use it for business optimization, of course. If you do look at your risk profile and then look at your supply chain and then look at your products, then you should definitely use this as insights, as business intelligence for actually optimizing, getting your business up to speed.
Actually, there's an example in Turkey. A metal packaging company had to suspend its delivery to a company in United Kingdom because the packaging company in Turkey have not been prepared for CBAM requirements. So it's a tangible example, as you said. Sustainability reporting can be used to enhance the resilience of the companies.
Yeah, definitely. And we do also see how these risks will actually turn into have an effect on your assets and your liabilities. Maybe you need to depreciate your assets. Maybe you need to figure out what to do with stranded assets because of your old technology, because of climate change, because of insurance effects. You cannot have your assets or your buildings insured. What would you do then as a business? But of course, it will also impact, in this case, your revenue, right? So
Yes.
it's very good to be prepared. And there will be much more legislation coming up in the years to come related to products, materials, packaging as
Yes.
well. This is also
Yes.
why we do have the EU taxonomy to actually clarify what would be more sustainable investments. But this will also be taken up for a simplification. So let's see where that will end as well.
Yes. What about CSDDD? The proposed change to the CSDDD seem to reduce the depth of mandatory due diligence, especially concerning indirect suppliers. Will this shift affect how EU-based companies engage with their suppliers in other countries like Turkey?
Maybe it will. Regulatorily, we do see simplification of the due diligence directive. In practice, if a company will look for risk profile in that tier 1, but also tier 2, maybe tier 3, then this sending out request will still happen. If they want to decarbonize their operations and their scope 3, the request will still be sent. If they want to actually approach, but also make sure that they live up to the UN guiding principles, then they need to do due diligence, because that is actually mandated to be a part of these communities. And with that said, if you have a due diligence policy, then you actually need to conduct due diligence. So I don't think in practice it will change that much. It may put, and actually also in both Norway, France, and some other countries, they do. I think the German one is a bit up for discussion as well, but they do have due diligence legislation. There are due diligence acts, human rights acts that actually already mandate companies to go conduct due diligence. And if you have proper due diligence, you actually also have a more effective business, and you have much more
Yeah.
overview of your supply chain. But what will be changed with the new approach, the simplification approach, is actually the highest amount of data points or data that you can actually request and push down into your supply chain. It's actually the VSME. So for a company to be well prepared for actually being requested by data deliveries by larger clients, is fulfilling the VSME standard. And that's, of course, only on a corporate level, but then on a product level, then you, of course, need to elaborate on the content and the circumstances around your product, of course.
Okay, actually, it will be my last question. How should Turkish companies perceive these changes? Before that, I want to ask a question about EU taxonomy. With the EU taxonomy introducing opt-out options and material thresholds, such as allowing companies to avoid taxonomy reporting if their alignment is 0, for example, how should we understand these changes and what will be the effect of these changes?
Yeah, we still need to see the final outcome of the discussions around the EU taxonomy. The great thing about the taxonomy, it was that it was somehow black and white, that fossil fuel activities could not be sustainable activities. With that said, companies having fossil fuel activities and green investment activities, for example, solar parks, could actually have a quite good sustainability rating. And this is the problem we need to solve. So are we looking at activities, or are we looking at companies? Because a company will have a wide range of activities no matter what industry you are in. But then we need to consolidate and look at the company as one entity. So that is the problem we need to solve. Having an alignment of 0% will have different explanations, of course. But if your activities, if you have 10% eligible activities and 0% alignment, and you have a good elaboration to why that's the case, and that you have a transition plan or a plan to actually align these with the sustainable principles, okay, that's fine. But if you do have 90% of eligible activities and 0% alignment, then you may need to recalibrate your business if possible. So I think it would depend on a case-by-case approach. But of course, I mean, having non-eligible activities is definitely not aligned with the strategy towards a more competitive Europe. And I think this is quite important actually to stress that sustainability is not the opposite as competitiveness. It's actually supporting competitiveness. So what actually happened in the launch of the competitive compass instead of the Green Deal, that was actually criticized a bit by the Draghi report, or actually the direction of the European Union was criticized a bit by the Draghi report because it was not competitive enough. It was not ambitious enough. So then they launched the competitive compass, and then that, of course, we still want to approach and embed sustainable practices into how we are driving our communities forward, because we do not have a choice. We do not have the same capabilities. We do not have the same amount of critical materials, resources in the European Union that is actually needed for the decarbonization of our cities and our businesses, and also the electrification of our societies. So we simply need to approach sustainability both in terms of circular economy, but also decarbonization and electrification in order to actually be competitive. Because we do see China, they're actually being quite smart and quite fast in their operations. And with the US like liberal way of investing, we do see some threats to the EU as well.
Okay, perfect. My last question: how should Turkish companies interpret and prepare for these changes? Do they offer a breathing room or a risk of complacency in sustainability reporting readiness?
Yeah, I think it will require the company to with this lot of uncertainty and also a bit abstract way of communicating the guidance and the direction from the European Commission. I think it's very important. It is always very important to understand the client expectations. So if larger companies, especially also in more Nordic countries, they especially care for this, they will be putting a growing pressure for data, sustainability related data, so they can actually align with frameworks like the ESRS or the CSRD, the European Taxonomy, Science-Based Target, or the TCFD. So I think it's very important to demonstrate for them that they have supply chain transparency and that they inform their suppliers in ESG risk management and also in emission tracking. I think one thing that we cannot get around as an SME will be our emissions. I think emissions calculation will be absolutely key. It's also in the VSME framework. So I think if you are a Turkish SME or a supplier, I think your client will likely ask you for ESG related data, certifications, or proof of environmental practices, the GHG protocol alignment, for example, for their scope 3 emissions. So I think that's very important. And then I think positioning yourself as a trusted and ESG compliant partner will actually create benefits for you, because then you will have a much more smooth partnership and they will trust in you because you do have the data prepared, you do have the reporting mechanisms prepared, and you do have the organization around how to deal with ESG. So I think that's pretty important. And then, of course, being proactive in the communication, making sure that you are addressing the needs of the client in order to commit to certain standards, certifications, or whatever. I think that is quite important. And actually take a look at the VSME, because it will answer the most basic questions that you may have from larger clients. And then, of course, utilize the data, use the data as business intelligence for actually optimizing your own business, making sure that you do have one place for all of your ESG data and not a lot of different places where you store the data, because then you end up becoming a data vendor. And once you're also asked about AI practices and stuff like that, you will end up spending a lot of hours on collecting data, gather data, describing what you're doing, your approach towards AI or sustainability. So I will definitely, as an SME, as a Turkish SME, start embarking on the sustainability journey, start collecting the scope 1, 2, and 3 data as well.
Develop decarbonization strategies to meet the demands of European companies. Amanda, thank you very much. You concisely summarized the complicated regulatory changes in the European Union. Thank you very much for sharing your insights, and also thank you for having with us today. Thank you for also our audiences to watch us. For next time, take care. See you. Bye.
Thank you. Bye.